How's it going, everyone? Hope you're all good. Welcome back to the channel. First video of 2024. As I said last year, I'm gonna try and improve the YouTube channel this year, just with slightly different bits and bobs here and there. I'm trying my best to get a little starter page and ending page going, but I'm just so busy with other things, so I'm still not got around to doing it. But yeah, let's just quickly go over this range strategy then. It's important to understand that price, I'm sure you've heard it before, I can't remember the exact figures, but it's like 70 to 80% of the time price trades in a range, and that's with any asset. It only trends like 20 to 25% of the time. So more often than not, you're waiting for ranges to break. If you think of how most of you trade Dante's strategy, you're waiting for a range to break, and once that range breaks, you're looking to get in and around a retest, whether that's the last low or last high. That's basically, put simply, that's what the strategy is. It's waiting for a range to break and then getting in and around the retest. So although this is a different strategy, it's very similar. There's very similar concepts which you'll see in a bit, which I'll explain in detail. I've got the Euro Pound on the left and the Nasdaq on the right, just because they're two markets that were very similar in the last couple of days, and just two markets that I was looking at. You guys obviously know about the Euro Pound, which I'll go over, and I'll quickly go over the Nasdaq, which was a really nice trade opportunity which I missed just because the setup occurred at 8 PM last night when I wasn't on the charts. I've got other things going on in my life. I play semi-pro football, and that's exactly what I was doing at the time. So yeah, wasn't at the charts, unfortunately, but there's always another trade. Let's start on the Euro Pound. So I think I mentioned it before, to be fair, that although I do, I started, and most of my trades are with Dante's strategy, with my own little twist here and there on them over the years. I did learn off two other traders, Trader XL and Trader SZ. They're very well known on Twitter and YouTube, and they just sort of, just watching their content just got me. What's the word? I just really started becoming familiar with how price moves and ranges, and when to look for, when is a range going to be broken, when is price in a range. Just really simple things, but once you learn and understand what happens in these ranges, it allows you to read price in general much clearer, and it becomes a lot easier to anticipate where a market's going to go. So, excuse me, this is the Euro Pound. Obviously, I was having a long chat with Daniel about in the group. So you guys already all know about the liquidity pools. When you get equal highs, equal lows, you can see all these highs up here. Actually, first it's important to know, you always want to mark out where range starts and where it's formed. If you completely forget about what I'm saying right now, and just if you looked at this chart from here, let's quickly get the replay tool up. How do I do it on here? There we are. Replay. Let's do that. So, if you think about how most of us trade, and I've been taught by Dante, this, you're waiting for this to go to get in on around the retest, or once and if these highs are taken, get a nice close pair, you're looking to get on around the retest, aren't you? So, like I said at the beginning, the way you trade anyway is ranges. Like, you're just getting in on the pullback and the retest of the range. But if I describe it in another version, it's all the similar concepts. Price is still doing the same thing. It's just another way of looking at the market. So, because price does trade in ranges a lot of the time, 80% or whatever it is. So you can see here in Euro Pound, we've got a high of the range. It's always important to know where your high of the range and your low of the range. Obviously, it's where the first high was formed. So, we had this big move down. You've then put in the swing high, a swing low. Always mark out the most recent swing highs and swing lows. I mean the big swings, not these shitty little, couple hours or something. Like, you want the big swings marked on your chart, because they tend to form the highs and lows of ranges. So you can see that was formed as a high, that was formed as a low. How do we know that? Because price came back up to the high of the range, rejected, came back to the low of the range. Look at that, beautiful SFP, rejected, straight back up to the high of the range. Again, hasn't taken it, which is a liquidity pull up here now. Back to the low of the range. With all things in trading, it's not specific levels, it's an area, so you know that this is the low, but it's all of this area is a range low. Come back there again, back up to the high again, and then back down to the low. So this is just a clear range. It's how price normally moves. Up, down, you're just going sideways, but you're in a clear range of a high and a low, and then you tend to want to mark the middle of that as well, because price does often react off that as well. It's the middle of the range. You can see it's a bit messy, this one, but here it's been respected, and a couple of times these wicks and stuff. But yeah, so in terms of what I was thinking of yesterday, I knew that we had all these equal highs up here, and just over the last year or two when I've been trading like this, I've come to find that a lot of the time, if there are equal highs or equal lows on either side of the range, the range tends to get broken on the other side first, on this occasion sucking in a load of shorts, and then it gets back inside and comes for the equal highs. Because can you imagine the amount of stops up here? You got like a clear triple top now. There's going to be so much stops up there, so much liquidity. So yeah, quite a lot of times you'll get a fake out, and that's again a Dante strategy. That's why you never trade the immediate retest, because that's basically a range breaking, and say this immediately retested, it's because you're immediately getting back inside the range, and price isn't showing any respect for below the range. That's what an immediate retest is. It's getting back inside the range straight away, so there's no respect for low price sort of thing. But trading these ranges, you can get what's called divergences, outside the range, and yeah, you do often get that deviations. Sorry, whether it's 1 hour or 10 hours or 2 days, if and when price does get back in here, all of this price action under it would be known as a deviation. It's just deviated under the level, under the range, sorry, and you're back inside going for the highs. So on this occasion, yesterday, that's where I got my SFP, as you guys know from the winning trades, and then I had eyes on like this, because this was just normally such a clear setup where you just take the low of the range, you suck in all the shorts, and you get back inside and go for the highs and take all the stops. But yeah, you want respect inside the range. So you can see we come back up here. I feel sorry for Daniel because his chart was a bit, but there was still no reason to get in to the trade, because you need respect from the other side. So once you get back inside the range, you need respect from the low side again before following through. So you can see here we closed basically above it if you're looking at the range low, but as I said, this is an area, it's not just one specific line. So we just about closed inside it, but you can see immediately high prices are completely rejected and we come back out of the range. So nothing to do yet again today. We've done the exact same, and you're just waiting now. If there's now a nice level, like for how you guys trade normally, you got a nice 2-touch level now already. So you already know with what I'm saying here about getting back inside the range, and you've got this clear 2-touch level now. You want to get long if this clears with a nice flush candle and you're getting on a random retest. You're coming for those highs. So yeah, it's just all eyes on that. And you can see even from here now, once you broke out of this range, you then entered another range. That's the range low, that's the range high. Come back to the low, sweep it, come back to the high, come back to the low, again, back to the high. This is another range that has formed below this range. So price 80% of the time is in ranges. And once you start seeing price like this, it becomes really easy. Not really, but it becomes a lot easier to read. So this would be a similar thing. Like if we close the day back up inside this range, then you're probably going to come up for the high of this mini range, which is just below this big range up here. But yeah, the reason I've got the Nasdaq up is because it's a really nice how the fuck do I get out of this? There we are. So that was obviously an example which we didn't get a trigger to get inside, and the Nasdaq now is a good example to show you the exact price action I want when I'm looking to get into one of these trades, which you had right here. So if you go on a daily here, another reason why this was really nice to look for is because you had this big candle here, and look, you had 1, 2, 3 days in a row where price was inside of it. So this is called it's obviously an inside day failure now, or this is the mother bar, it's called. You've taken the low of that, and quite often you come up and take the other side of it after that, which hasn't been taken. You can see. Whilst that was going on daily, all of this was going on the hourly. It's again a clear range. So you have this big move up. That's the swing high. That's the swing low. You're in a range. Back to the high of the range. Back to the low. As I've said, it's not an exact point. It's just an area. This was a bit higher, but it's very close to there. Range high, range low. Back to the range high. And look at these two highs. Even this one here. None of them have cleared that high yet. There's going to be a lot of liquidity up here. A lot of stops. So what do? This is better than the euro pound because this actually gave you a trigger. So I actually had this planned yesterday, but as I said, it was 8 PM when it happened, which is a bit of a shame. Really nice clear trade. So we smashed below. They often do this as well, ranges. They break out with a big candle to suck loads of, whether it's longs up here or shorts down here. Look how bearish that candle is. Huge down candle, closed right through the range low, which obviously I know is the mother candle low as well, as I just explained on the daily. But look what happens. This is, again, it's the same with Dante's strategy. Immediate retest, you don't want it because it's showing that there's no respect for low prices. You're getting right back inside the range. That's literally what an immediate retest is. So you can see here, and again, euro pound, I was talking about a big deviation. This is the deviation of the level. It's only 1 hour, but that is a deviation, as in you've come outside the level and you've deviated back above. Sometimes it takes an hour like this. Sometimes it takes 2-3 days, even longer. So yeah, knowing that all these highs up here, knowing that this is the low of the mother bar of the inside day, you've taken it now. You've got back inside the range. Like I said, you could have got long there, yes, but I like to wait for confirmation of acceptance from the range low again. So you have a nice push back into the range. This is your clear sign of acceptance back in the range, because you come back down, look, absolutely perfect with that wick almost, bang off of the range low. That's still not a trigger for me to get in yet. You still want to see further momentum, because then it's a proper, back inside the range, retest the low of the range, and off we go again. This I probably would have entered here. I normally like to see this swing high, so if that swing high were taken, I would have got long. But yeah, same thing. You've now had a deviation of the range. You've got back inside the range and retested it from the other side, and you're accepting that you're back in the range. Really nice clear price action with all these equal highs up here as well. So yeah, that was really unfortunate because that candle was at 8 PM, as I said. That candle closed, and yeah, I was playing football at that time, so I wasn't on the chart. And yeah, price just flew to the other side of the range. So it's a really nice strategy, but you need to understand. it. I don't want just suddenly loads of you sending me trades like of ranges and like you're trying to ask me, is this a deviation? Are we back inside the range now? Like, I don't get many of these trades. Like, it has to be perfect. I only get like, I said before in the group, I only had like 2 to 3 trades on average last year, and probably out of all of them, range trades is probably 1 or 2 a month, I'd say. So there's not a lot, but it was something I started to put my foot down in the last 6 months last year. So I anticipate I will get a lot more this year. So yeah, hope you all understood that. If you just see with the Nasdaq now, are we gonna get acceptance above this range? Let's see. Obviously, it's got a bit messy up here, but it's the exact same again. Like, if you had a clear frost candle here and time and space, just how you guys trade, you'd be looking at the round of retest here, wouldn't you, for the last high pre-break, which is basically a break of the range and a retest, and you're hoping for high prices. So yeah, it's all very similar concepts. Hope you understood. Any questions, give me a shout in the group. Cheers, guys.